Hey, it's Lewis here and welcome back to the channel, and in today's video we're going to be analysing Nintendo stock. We'll be using TIKR terminal to go through the financials, and then I'll sit the cash flows into my DCF and we'll come to a fair value of their stock. Let's get straight into it. So who are Nintendo? So Nintendo Co. Limited is a Japanese multinational video game company headquartered in Kyoto, Japan. It develops video games and video game consoles. The company itself was founded in 1889, so it is an old bloody company, isn't it? The company itself, they make Mario, Donkey Kong, all sorts of different brands, Pokemon, Legend of Zelda, Kirby, all sorts of different brands, but Mario, Pokemon, they're the main brands for Nintendo. The company itself is listed in Tokyo. It's part of the Nikkei 225 index. You can also buy a USADR on the New York Stock Exchange as well. Now let's have a look at the sales for Nintendo, and we'll start with the sales per business. So 2022, game-only machine, so Nintendo Switch platform, made up 95% of revenue. Smart devices and IP made up 3%. Game-only machine, other, made up 2%. So that revenue split, I don't think that's too helpful, to be honest. Just from first glance looking at it. But Nintendo Switch platform, it means a lot of the income comes from Nintendo Switch then. Sales per region, so 37% of sales come from the United States. Europe makes up 25%, Japan 21%, other 11% of the Americas 6%. So quite diverse across the world, which is a great sign. Now let's have a look at the financials for Nintendo, and as always we will use TIKR terminal, and let's have a look. So 5 years worth of data, and we'll start with the income statement as always. So over the past 5 years, so all of this is in Japanese yen, so high nominal amounts because there's a lot of Japanese yen out there. Over the past 5 years, revenue has increased by a fairly decent amount, by a lot in the past 5 years, which is really, really good. Let's have a look. So let's look at net income, and the profit has increased by 3 times in 5 years, which is really, really good. Like, you can't complain at all from there. Share count decreased ever so slightly, but minimal. So let's just say not really bought back many shares. Cash on hand has increased by a lot. Just a little metric I like to see. Let's have a look at debt. Apart from current liabilities, there's no long-term debt for Nintendo, which is awesome. There's no long-term debt for Nintendo at all, so that's a really, really good sign. Return earnings have increased by a good amount, which we love to see. Cash flow statement now, and let's have a look at cash flow from operations. So capex. So cash flow from operations minus capex is free cash flow. So what you want is this figure to be going up over time. And as you can see, it has been. We had a really good year in 2021. It's come back down a little bit in 22. We had a really, really good year in 21, but it's come back down to earth a little bit, which probably expected after the reopening of the world after the pandemic. So we paid some dividends as well, which is decent. We purchased a little bit of shares, but from what we saw, not very much at all. Onto the ratios now. So I like the ratios because it tells a bit more of the story of the business. Return on capital is pretty decent as well, especially the past few years. It's been increasing by quite a lot. If you can keep it this high, that's a really, really good sign. Anything above 15 in my book is a good figure. Gross profit margin as well is increasing, which is epic. Net income margin as well. Let's see if they can keep it at these figures, but it would be decent. Current ratio, so much liquidity in this business. We've got way more current assets than current liabilities. The CCC is below 60, what I like to see, which is awesome. No debt to capital, so total liabilities to total assets is 22%. So there's effectively no debt in this business, which is epic. Really, really good. So this company is not going bankrupt at all. Really, really good sign there from Nintendo. But if you're interested in using TIKR terminal, head into the link in the description down below. Hit the link, sign up to TIKR, enjoy analysing companies. I've been using this platform for a few months now. Really, really good stuff. And if you're a value investor like me who analyses companies all the time, you'll really enjoy it. So once again, hit the link down below, sign up to TIKR, and happy analysing.
If you are enjoying today's video, then why don't you book in a one-to-one coaching session with myself? In these sessions, you will learn how to analyse a company using fundamental analysis. As well as this, you will learn how to value a company using a DCF model. Value investing is the art of buying stocks which trade at a significant discount to intrinsic value. Value investors like myself achieve this by looking for companies on cheap valuation metrics, typically lower multiples of their profits, assets, and cash flow as well, for reasons which are not justified over the long term. Billionaire value investors such as Warren Buffett, Charlie Munger and Joel Greenblatt have all used these timeless concepts to beat the market over the long term. No financial advice will be given on these calls, financial statement analysis and business valuation, education only. I will see you there.
So now let's have a look at generating impact. So for Nintendo, they're not currently on the generating impact platform. It's not in their stock universe. But if you'd like to use generating impact, hit the link down below. Sign up to generating impact. Use it as a part of your stock research process. Go through the different pillars for value, quality pillars, and have a look at all the different metrics on generating impact. Now let's have a look at the analysis checklist for Nintendo, and as always we'll start with my first pillar. So profitable, high return on capital using low leverage. You can see all the green here is looking good. So return on capital 5-year average is 18%, so that is really solid, and we can see it's been increasing over the past few years. Profit margins are way above where I want them to be, and free cash flow margin as well. No complaints at all, very profitable business. Debt wise, so there's a lot of liquidity, so way more current assets and current liabilities. Cash conversion cycle is below 60 as well, so they get cash withdrawal very quick. And look at this metric here, total debt to capital. I think they should have a gold star next to it, give it an extra boost, but 0% of long-term debt. Epic stuff. Proven ability to grow over the past 5 years, smashed out the park. Capital allocation wise, long-term debt repayment, well they've had no debt to repay, so can't knock them for that. Decreased shares slightly, grown the dividend, and they've had some gain on asset sales, so they haven't made any bad capital allocation decisions. So 100% quality score. Yeah, it fits the bill for me in terms of a company I'm looking for. Buy at fair price, so the PE isn't pulling through for whatever reason from Google Finance, but not to worry. Price to free cash flow is more important anyway. So 13, that is looking relatively cheap, let's be honest, in the grand scheme of things. And a DCF valuation for a 10% return for the US dollar ADR is $48. So the company would have to fall 11% to get to my fair value figure. Let's have a look at my DCF now, and I've got both Japanese shares and the US ADR. So the US ADR is 1/8 of the value of one share. So if you can just see the formula there. So yeah, analyst estimates from marketscreener.com. I'm free cash flow actually decreasing over the next few years. Probably I think it's fair to say free cash flow is going to decrease in the coming years, but it should maintain at a very solid level and is definitely valued to that free cash flow. So yeah, fair value of the company adjusted for net cash on my balance sheet is a lot higher than the actual normal cash flows. So $48, so that's 53,000 yen. So we have a look at the share price. I'm currently at 60,000 yen. When was we last at? 53, so back in January. So I should have been paying a bit more attention to this, shouldn't I? So most of 2021, it was around where I would be looking at. So yeah, it's been in my range over the past year or so. So yeah, when it gets back to my figure, I'm going to be looking at this and going ahead and adding it to my portfolio most likely. Great quality business, 100% quality score. It's getting close to a fair value price. So yeah, Nintendo is looking like a very interesting opportunity right now.
So there we have it, that was my full stock analysis for Nintendo. If you enjoyed today's video, then please subscribe to the channel. Thank you very much for watching. I will see you next time.
Thank you for watching. As always, it would be amazing if you could like, comment and subscribe to the channel if you enjoyed this video. I will see you in the next one. However, you can check out some of these videos.